Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Salesforce earnings, which is upcoming this Wednesday, August 30th, and that is going to be after hours. Now, Salesforce is a company that we have talked about many times on this channel because they are now a part of the Dow Jones as of 2 years ago, and they are a stalwart in the software space. This is a company that currently trades at $210 a share with a market capitalization just north of $200 billion. Now, just like the broader tech industry, this is a stock that has not had a very good past year, but in terms of the year-to-date move, the company has performed very, very well, with a little bit of weakness over the course of the past month. If we look at where they were a year ago, though, you can see that the stock did struggle at the latter half of last year before rising back into a new 52-week high about a month and a half ago. They have not gotten back to when they were added to the Dow Jones, and the stock was up north of $300 a share. Now, this is a company that continues to perform very, very well, but with the earnings announcement that is upcoming here, we're going to be looking at a few different things in particular. The first one is from a revenue perspective. Yes, they're going to continue to maintain a very strong revenue presence. We're hopeful, and what we're going to be looking for on this quarterly basis is that from the total revenue perspective, that we're expecting to see an increase in the ongoing performance obligations. And what that essentially means is that their recurring revenue, we want to see that continue to maintain very, very strong. That strength is going to lend Salesforce the capability to continue to grow in the event that the broader tech sector, in particular tech sales, continues to be lagging. Some of the reasons why that's lagging is because some of that boom or bust cycle that we saw 2 years ago is beginning to have those lagging effects be seen in terms of software sales, in terms of larger companies laying off some of their workforces, and these companies which had these mega runs are finally having to pay the piper. Now, you can see from a total revenue perspective that with Q1 coming in at $8.2 billion, that the company is doing very, very well by being able to take all of that down to a net income of $200 million. One thing that I'm looking forward to is if they're going to be able to hold some of those costs constant at the same time they're increasing revenue. At this point in time, we've been seeing very heavy focus on growing the top line. I think at this point in time, we need to see focus on growing the bottom line, because if they can't improve that profitability, there's going to be some pain points. One of the ways they achieved additional profitability was through layoffs at the end of this year, and I do anticipate that they are going to continue to focus on some of those cost reductions over the course of the latter half of this calendar year. From the Q2 earnings perspective, what they're going to be looking at is focus on that recurring revenue, revenue growth, and what their companies that they are working with are seeing. At this point in time, this is a company that works with a very large client base across the United States. And so that forecast is not only going to be specific to them, but also going to focus on other companies that they work with in terms of how they're expecting to perform over the latter half of this calendar year. All that being said, at this point in time, the price to earnings ratio for Salesforce is incredible, coming in at north of 550 right now compared to an industry average of 58.42, according to TD Ameritrade. This is one of my largest concerns, recognizing that the company is trading at an incredibly high valuation. I also recognize that despite that, there are a large percentage of institutional investments in this stock, mostly coming through index fund investing because they are part of the Dow Jones. However, this is a company that, due to the high rating or the valuation that they possess right now, they have a long way to fall before that normalizes, especially if they don't have a big earnings quarter at this point in time. Leading to some of those weak earnings is the fact that they are going from a gross profit margin of 74% down to a net profit margin of 1% at this point in time. Again, some of that lackluster performance can be due to some of the write-downs that they've taken on different investments over the past 12 months. But what we'll be looking to do is focusing on not really the earnings per share growth. That's obviously going to be important, but it was pretty light last time, so we want it to be a much higher number. But we're really going to be focusing on this revenue growth staying north of 10%. If they can achieve that, then the company should continue to stay very comfortable. Salesforce isn't going anywhere in the immediate future, but from an investment perspective, we definitely want to make sure that they continue to perform very, very well, because if they can perform well, then that should bode well for both index investments as well as the overall tech market in general. This is one to watch. Something I anticipate them focusing on is the way that they are bringing generative AI into a lot of their product suite. If they're able to do that in a strong format that may bode well from a sales call or earnings call, that is something that we saw happen with AI or NVIDIA, which is an AI leader, which is how much were they able to produce. At this point in time, tech continues to be under heavy, heavy pressure. The question is if Salesforce is going to share a similar experience there, which we've seen over the course of the past month. This is an interesting one, and again, they'll be announcing on August 30th after hours. Tune in to the Discord linked in the description down below and free to join if you'd like to hear more. Thanks. Talk to you later.